Good day, everyone, and welcome to FXDD Advanced Chart Patterns webinar. My name is Nenad, and today I'm going to show you chart patterns and some advanced chart patterns, because last time we had normal standard patterns. Now we are going to advanced. Before I start, have in mind that Forex trading carries a high level of risk that is not suitable for all investors. Please have in mind that before you start trading live, check all investment objectives, experience level, and risk tolerance. Your deposit is at risk, so please do demo trading before you start trading live. Everything you see and hear from me is my personal opinion only. With having said this, on these web addresses, you can sign up for more live educational and live trading webinars. Now let's start. What are chart patterns and advanced types of chart patterns? So basically, guys, chart patterns, quickly, we already talked about it last time. Chart patterns are representations of price action in a given time period. So whenever you see that something is moving in the market, there might be a chart pattern. For basic chart patterns, please refer to previous webinars. Now we will start with advanced. First, and one of the patterns that I like to see is so-called Adam and Adam. Adam and Adam originally represents W pattern, but it also has wicks. Those wicks go to the bottom. And when you see that wicks are actually making the price spike, okay, always try to watch for potential move to the upside, like here. Validation of this pattern comes at the point to breakout. So this is Adam and Adam. And here, guys, you can see how it looks when we zoom in. Also, this is point 1, this is point 2, this is point 3. When point 2 is broken, price is expected to go upwards. So we might see that Adam and Adam is additional cue for any market to proceed further up. Very often, point 2 is taken as a breakout trade where stops are put below 2 legs and profits are taken with either price projections, pivot points, or Fibonacci extensions. Now, next one that I like to see is actually rounded. Let me quickly show you this one. Yeah, this is W, again with wicks to the downside that can also represent Adam and Adam. Next one is rounding top. Usually when you see rounding top, you might also think of head and shoulders. But the point is that price forms a gentle curve at resistance. Like here, you see? Price makes a curve. Now this might look like shoulder, head, and shoulder, but it's different in the sense that the curve is not that steep like head and shoulders, or inverted head and shoulders. So if you see this pattern, then you might also assume that the price is going to drop. The validation of this pattern comes usually at the breakout of this rounded bottom. So if this was the start of rounded bottom, the break below this level usually cues for a downside movement. Okay. Now, next one is T89. T89 is my own pattern, and I have created it. Basically, this is short of tail 89. Some traders were actually joking that it represents Tarantula 89. I mean, it can be also Tarantula 89 because I have created this, and this is very simple pattern, yet it can be very effective. The basic premise here is that the price spikes and makes a pin bar rejection of the EMA 89. So when I put EMA 89 set on close, I watch for these spike rejections. Usually a rejection from EMA 89 in a form of spike where the body is small and the wick is bigger than the body. This represents a continuation, and the validation of this pattern comes at the break of the high of the of the T89. So when usually price breaks it by 2 pips plus the spread, we are ready to enter a long trade. And this is also a standard pattern that I use for my Camarilla MACD trading with very, very good results. And Camarilla MACD is actually my proprietary method that I use to trade, and you can always check performance at myfxbook.com. Levez, or low volatility zone, is historical support or resistance versus now moment. We need to watch the zone to the left. And if you pay attention to the zone to the left, you will see that there are wicks. These wicks should be found in now moment, but not in the form of wicks, but actually of small candles. So if in now moment we see small candles, we take a look to the left, and if we see a big wick, it means that at now moment price is consolidating. So we might expect a breakout. Usually breakout happens when market gets some volatility, and if it's in a direction where the previous wick was, we can take the entry. So in this example, we can see that the market moved up, so we expected an up move after this small zone has been established. Like here, you see the small zone. So this is so-called Levez and low volatility zone. CBR is continuation, breakout, reversal. CBR pattern happens usually in consolidating markets. The basic premise behind CBR is that market shows two side by side, or not side by side, but two consecutive wicks. If we want to go up, if we want to buy the market, the currency pair here, the first wick should be bearish, like this one, and the second wick should be bullish, like this one. The break of the high is actually the entry. So in this example, the entry would be exactly at this point, because we have two parallel, actually two opposite hammers, or two opposite dojis, or anything that has the wick and the body. It can be like this, it can be like this, but these wicks are actually important. This is the entry to the long side. So this pattern can also be spotted when markets are consolidating, and usually during the consolidation we can expect a breakout. Next one is volatility spike. Now this is a fake out pattern, and this pattern can fake you thinking that market is going to proceed in the spike direction. Characteristic of the volatility spike pattern is that it shows during the news, or usually when something happens in the market, like out of the blue news, some reaction at let's say central bank president, chief, or let's say when Mr. Trump, president of US, makes some interesting tweet or something that has not been yet covered, the market can react like this. And whenever you see volatility spike, check if there is something that drives it. Go to, let's say, forexlive.com. That is one of my favorite websites. They really cover real-time Forex action, and see if there was a driver which actually made volatility spike pattern in the market. The characteristic of the volatility spike is that market makes a big spike like this. You can see a very big spike. And usually after the spike ends, market goes the original direction. So you see the market was down, 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 then it spiked. And this is usually, traders would say, okay, now it's time to go long. But no, actually it's time for the price to continue going in its trend direction. So this is volatility spike. Next one is bearish order block. We have bearish and bullish order block. The bearish order block represents the low of bullish candle prior to move down. Okay, so Prior to move down, this was the low. This is also order block. So order block is here. In now moment, usually when price breaks, it goes and to retest this order block. So you draw the line at the order block, and usually price reaction is very strong. Usually the order block will create a resistance or support in a given time frame. So big swing point or unusual spike that protrudes to the left of your chart is order block. So this is typical bearish order block. This is also bearish order block. And whenever you see this, draw a line and use the line as a resistance level. This is actually, here you can see a nice wick that the low of the wick is resistance if the price goes and retests it. Bullish order block is the high of a bearish candle prior to move up. So in this example, this is bullish order block. And here, if we draw the line, you will see that many times after the price breaks it, retest will be successful. See this. So this was bullish order block. I always watch for bearish and bullish order blocks on the chart, especially when I see that the market is trending. Then during trends, bullish order blocks and bearish order blocks are usually strongest. Okay. Also, we have hook reversal top. Hook reversal top is the pattern that gives you an interim top followed by a lower high. So hook reversal top has consolidation at the top, then price makes a low. So this is point 1, consolidation. Okay, point 2 is the low. Point 3 is lower high. So once more, point 1 is consolidation. Point 2 is the low. Point 3 is lower high. So point 1, point 2, point 3. When this happens, markets usually are bound to go down because this is the characteristic of the hook reversal top. Cup with handle is also a bit, I can say, popular with Forex traders because cup with handle is a bullish pattern that is characterized by low volatility zone in the handle itself. So the price makes a rounded bottom and then it starts to move sideways. Usually the sideways move here is the handle. So you see, this is the cup and this is the handle. The breakout of the highest point of the handle is your actual entry, point 1, point 2. And when price breaks the point 2, you have an entry. So this is so-called cup with handle. All of these are advanced patterns that you will probably get familiar with if you take a look at your charts, try to scan them in the past, and see how market behaves. V-shaped reversal or diving board is the exact, I can say, reversal in the market. Why I say exact? Because it shows a V at the bottom. So diving board is here. The markets are consolidating. This is point 1. Point 2, price drops. You see how the price drops like a diver. It goes down. So this is called diving board. Usually after the diving board, that is point 2, you will see a strong reversal to the upside like this. And this is point 3. So consolidation, then up downward move and V-shaped bottom like here. This is a very good representation of V-shaped reversal. Usually V-shaped reversal either reverses the price to the upside, completely changing the trend, or after some consolidation, the price might start to move down. So I never trade this pattern. I just watch the reaction after the pattern has been formed. So always watch for V-shaped reversal and diving board. Also, what is important to say is that all of these patterns can be found on your platform. So let's start with, let's say, scanning through different pairs. For example, I will open a template and we can actually go with standard, I don't know, whatever template it is. We can use normal template without any indicators. We don't need indicators for this. I will remove them. And let's see how it looks. I like to see those patterns on 1 hour and 4 hour time frames. So here we go, guys. V-shaped reversal. See this? Okay, see, this is V-shaped reversal. Again, V-shaped reversal. We can go in the past. I will try to mention only advanced patterns, not basic ones, because basic we already covered. Okay, here is small W, and if the wick was a little bit lower, this would be Adam and Adam. But Adam and Adam know that Adam and Adam is stronger than W. Okay. This is head and shoulders. Okay, see this? It can be also a rooftop, but this is head and shoulders. Here we go. We have Adam and Adam here. See this? These wicks are Adam, confirmation of Adam and Adam. Okay, see this? W. This is your entry point. And see this? Originally, I've noticed that Adam and Adam has a stronger reaction to the upside movement than W because of these now moment buyers that are pushing the price to the upside. Okay. Okay, let's see. Oh, this can be also volatility spike. See this candle? Bang, 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 bang. Volatility spike. Down, 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 down. And suddenly, bang, price moves, especially this candle. What happens after this? The price moves in the original direction. So this can be volatility spike. This is very close to being Adam and Adam. This one. Very, very, very close. See this? Okay, this one. Very close to being Adam and Adam. Okay. Okay, let's see more patterns. You can always spot patterns, guys. W. This is it. See this? Clear W pattern. And the price didn't proceed much to the upside, but this is the entry point. 0.2. This is 0.1, 0.2, 0.3. And you see what happened. Resistance here and the price reversing. But this was W. And when you see the W forms at the top of the move, stay away from that. Don't trade it. So guys, basically, this is what you can always find on your chart. So this webinar is being recorded. It will be uploaded to FXDD YouTube channel. So please sign up and watch. Any comments or questions, do not hesitate to ask. I will reply. Thank you all for watching. I guess that everything is clear. No matter which kind of trader you are, price action or indicator-based trader, these chart patterns will help you out in making good trading decisions. Thank you all for listening. I will be with you soon. Cheers and trade safe.